Thank you so much. So I think if I had known about the type of events that would unfold over the last 24 hours, I would have probably chosen to talk about the value of holding, trading, and lending and managing your crypto with a fully regulated Swiss bank who solely focuses on the world of digital assets. I would have probably chosen to talk about the value of proper asset segregation, about the value of holding assets in custody with a central custodian without being exposed to any counterparty risk, because such assets are being held off balance sheet. I would have probably chosen to talk about having proper and sound governance mechanisms and risk management principles and frameworks in place. And I would have probably talked about being subject to regular internal and external audits across security, financial, as well as procedural aspects of our business. Because we do all have all of that at Sygnum Bank, right? We are the world's first digital asset bank with a banking and securities firm license in Switzerland and a number of CMS licenses in Singapore. And we are serving private wealthy individuals and institutional clients, as well as corporates being active in the DLT space across the globe. But instead, since I didn't anticipate these developments over the last 24 hours, I chose to talk about the more forward-looking topic, namely the emergence of something that people call CeDeFi, so centralized, decentralized finance, or institutional DeFi. If we look at today's market, it's quite divided between centralized players who offer services such as custody, trading, lending, and other types of activities related to the managing of crypto assets. And there are, on the other hand side, DeFi protocols operating decentralized infrastructure to facilitate simple financial use cases by operating decentralized lending pools, decentralized exchanges, and other types of business activities. And obviously, there are a lot of different shades of gray if you look at the players in the cefi space and at the DeFi space, be it when it comes to the level of centralization versus decentralization, the level of governance, the scope of offerings, but obviously also, and not less importantly from our point of view, the regulatory status. Obviously, it's easiest for me when we have a closer look at the CeFi players to talk about ourselves at Sygnum. I think we're proud to say that we have achieved a lot in terms of being able to offer regulated crypto custody, staking, spot and derivatives trading services. We're offering Lombard loans against cryptocurrencies as collateral. We do offer hash rate backed loans for mining companies, which means that mining companies can draw a loan by, in return, using some of their hash rate or mining productivity as collateral with us. We have been quite successful in tokenizing real-world assets, and most recently we've also launched an institutional-grade NFT platform, the first of its kind, operated by a bank worldwide. And all of which was only possible because we had the privilege to be working together with a very progressive regulator, both in Switzerland and in Singapore. And especially in Switzerland, the work with a very progressive regulator was complemented by the fact that in Switzerland, we had the pleasure or privilege that quite forward-looking legislation entered into force over the course of 2021, when more than 9 federal laws were amended in order to provide a robust legal framework to conduct businesses that are DLT-based, and obviously also to operate in DLT-based securities. But there's also a big but. I mean, there is always a but to everything, right? We were stopped with our most forward-looking and most disruptive initiative when we wanted to offer our clients to be able to deposit and borrow assets into and from the Aave decentralized lending pool. And as it stands today, there was no way for us to convince the regulator to allow us to do so, because the regulator has too many concerns and sees too many challenges and open questions as to allow us to allow our clients to interact with the decentralized lending pool such as Aave. Even if we made use of Aave Arc, the stance of the regulator is very clear. As it is conceptualized today, they will not allow us to use it. Which basically means that ourselves, but also our clients, are being prevented from taking benefit of what decentralized finance has brought forward, which is something that I personally, but also we at Sygnum, do not want to accept, because we feel the power of DeFi is too big to be ignored, too big to be neglected, and too big not to be embedded into the provision of regulated financial services. Wow. Which brings me to exactly the topic that I wanted to cover today, which is CeDeFi, or institutional DeFi. I think the idea is fairly simple if you look at the slide, right? It's really about bringing these two spaces together. Obviously, from the CeFi side, and especially the regulated CeFi side, it will be about bringing and honoring still the all applicable legal compliance and regulatory frameworks, especially when it comes to KYC, AML, but also market conduct and investor protection mechanisms. And on the DeFi side, obviously, it's all about taking benefit of the technology infrastructure that has been built and optimized over the last couple of years and bring them together to efficiently work together. I mean, one example could be basically a further evolution of Aave as a decentralized lending pool, right? Or I have to say a further evolution of Aave Arc as a permissioned decentralized lending pool where only such institutions would be permitted to participate in such a lending pool that comply with all applicable regulations on the one hand side, but on the other hand side also do have regulatory approval in order to allow their clients to take benefit of such a decentralized lending pool. Now, obviously, there are a number of challenges, and I think our dialogue with the regulator has shown us that there are a number of challenges, concerns, and open questions that need to be addressed and solved before we can bring CeDeFi to fruition. I think, first of all, it's about the technology infrastructure that is to be used, right? I think there, for me, it's very clear. Let's not reinvent the wheel. I mean, DeFi protocols have invested so much time and effort to optimize the technology. It's not up to us to question that or feel that we need to reinvent anything on a technology level. But it's up to us to solve the regulatory questions that I have referred to earlier around KYC, AML, and other aspects of regulatory frameworks that need to be adhered to. But it's also about solving questions around data privacy versus data transparency, especially when we want to use public blockchains in a context of CeDeFi solutions. It's about solving questions and concerns around cybersecurity and governance aspects, especially when it comes to the deployment of new smart contracts into such CeDeFi operations. But it's also about solving legal questions around, for instance, the enforceability of contractual clauses that are embedded into smart contracts and whether they uphold in front of court, as well as it's solving questions around recourse mechanism or reversal mechanisms, a widely known concept in traditional finance that may or may not be equally replicated when using decentralized infrastructure. But obviously, innovation is always difficult, right? If it was easy, we would have seen a number of CeDeFi offerings already having emerged. But I also don't think at the same time it's impossible to create and operate a meaningful, functional, and value-adding CeDeFi solution. Currently, as it stands, CeDeFi is still in its infancy, of course. Very few players have started exploring it. I think we've heard it this morning also when Stani spoke on the main stage, that there is one project that in particular has caught quite some public attention, which is Project Guardian, a project that was brought to life in a joint effort by DBS, Oliver Wyman, Onyx by JP Morgan, and SBI Digital Asset Holdings, SBI Digital Asset Holdings being one of our investors at Sygnum. And they did it, and that's particularly interesting. They did that project together with MAS, the Singaporean regulator. And the idea or the goal of this project was actually to see how institutional DeFi could unfold its value in a fully regulated environment. And the initial feedback and results that were recently published were extremely promising and positive, so I still hope that many other projects will follow, and I think Sygnum will try to make a major contribution to that development. And the reason why I'm stressing Project Guardian so much is because I think the approach that these players have taken is super smart. They've brought together a number of digital asset savvy players, financial institutions, regulated financial institutions across the globe, and they've been working closely with the regulator, involving them from the very first step in the solution design, in the conceptualization of the solution, rather than trying to find the technology solution that works, trying to find the optimal user experience, to then present that solution to the regulator and putting pressure on them to react to it. They've involved the regulator early, helped him provide input along the way, such that at the end, the solution that will emerge out of that process will be a one where a regulator will have a very hard time to say, oh no, we still don't feel comfortable, because they've been part of the process. They could have intervened much earlier in the process, which I think makes the setup very powerful. And I think the last element why I believe it's very powerful is also because the project didn't feel they need to come up with a private blockchain. They didn't feel they need to solve technology issues, but they understood that they can just use a forked version of Aave in order to facilitate those use cases. And I'm very much looking forward to seeing many more such initiatives going forward. And I would also invite all of us to contribute to those developments. In order to close, I think none of us knows what a CeDeFi or institutional DeFi ecosystem would look like in the future. Neither do I, but for me, there are a number of components that are very clear. I think one is there must be something like decentralized trusted identities. I think in an ideal world, a participant in a CeDeFi offering does not have to identify themselves and undergo a lengthy and extensive KYC AML procedure whenever he or she wants to interact with a CeDeFi offering, but they can do it once with a trusted party, and basically then that vetted identity is embedded in everything they do. It might be periodically need to be reviewed and renewed, which is a regular, normal process, but it cannot be that whenever I interact with something new, with a different provider, with a different type of offering, that I need to undergo the very same process over and over again. I think a second element is that, again, on the technology level, let's rely on proven and already established DeFi infrastructure. There is no need to reinvent the wheel, really. I think there are companies who have done that, a lot of developers who have done that year after year, so let's just use it. It's there, and it's open source, and we can make use of it. I think the third element to me is full legal and regulatory clarity, what I said before, but it's not only the legal and regulatory clarity, but it's also the buy-in and the commitment of regulators and lawmakers to support such initiatives and such developments. And finally, I believe we need a number of trusted and well-governed parties to act as the gateway for end clients to interact with these CeDeFi offerings in order to be able to take benefit of it and unfold their true value. And with that, I'd like to thank you very much. It was a pleasure.
Man, I love your deck. It's so stylish. Well done, thanks for that. How are you finding being in London?
Fantastic. I used to live in London for half a year when I was younger. It's one of my favorite cities, so I love to come back.
And so what do you think about what's currently just happened with the whole Binance and FTX thing? What's your view on it?
Well, you know, I'm not sure I have already had the time to create a view on it. I think I'm more concerned about standing here on stage while my teams in credit and lending, in trading, are trying to make sure that all our panicking clients are being taken good care of. I mean, we are not exposed to whatever is going on with FTX whatsoever, but obviously we see a lot of clients who are unsure about what is happening in the space, want to withdraw assets from FTX, bring them to us into safe haven, if I may say so. So I would love to be with my team taking care of our customers, but I'm equally happy to be here with the audience.
You know, ultimately, I think it's kind of a step back for crypto. When you start to see a fall of a token price, a run on a peg, and ultimately over-leverage with poor oversight, I think, and certainly from my background of coming from traditional finance and working for a tier one hedge fund, who always wanted and had interest at the digital asset space, I think now the questions I'm going to get is, what the hell are you guys doing over there? How do you view it?
Well, I mean, I don't know whether it's something that we are doing, right? It's just something that is happening in the industry. I think we cannot prevent it. I think for many of us, it has come as a big surprise. I mean,
absolutely.
To me, FTX was always kind of the hidden champion. I mean, I think everyone admired SBF and what he did and also what he stood for. So I think it came as quite a surprise. And it is definitely, it's damaging for the industry. It's definitely damaging for the perception of crypto. But I'm sure we will recover, and I have a lot of confidence that people will understand.
You know, when you look at what happened with Luna, Terra, Anchor, 3 Hours, and Celsius, which were all cefi type plays, actually when you look at traditional DeFi and what happened with Compound, Aave, everything on the traditional DeFi protocols actually function quite well, and that was really great to see. There was almost a battle test going on, and that was pre-merge with Ethereum. So I think that was quite interesting as well to see that.
Yeah, exactly. That's why I think we need more of that. I think we need to embed exactly this into what centralized finance is doing at the moment. And I think, be it DeFi or cefi, I think ultimately also regulation has a certain value, right? Because it makes sure that things are properly governed, the right standards are being adhered to, and ultimately customers are protected. And that's what we're here for. That's what we stand for.
Brilliant. Well, a big round of applause for Thomas. Well done, Thomas. Excellent presentation. Thank you so much.
Thank you.